Hi everyone, how's it going? My name is Henk. So recently we've got an email sent out to people that use Sharesies about the upcoming Harmoney IPO. So an IPO is where a company gives the investor the opportunity to purchase their shares before the company goes public on the exchange. So Harmoney intends to list on the Australian exchange on the 19th of November in 2020, and it's also going to list on the New Zealand exchange around the same time. So in this video, I'll be looking at whether or not Harmoney is a good investment opportunity for you. So who exactly is Harmoney? Harmoney used to be New Zealand's largest peer-to-peer platform, which means that as a retail lender, you can lend your money to people that sign up for loans. So they were first established in 2014, and they have lent out more than $1.5 billion. However, they have announced earlier on this year that they will not be providing any new loans available to retail lenders. So that happened in April of 2020. So as a retail lender, you cannot participate in lending out loans to people taking out the loans anymore. And instead, they will only focus on institutional lenders such as banks mostly. And this goes completely against how the company is originally funded. So the company was funded to be a peer-to-peer lender, and then suddenly they decided not to do that anymore. So while it has marketed itself as a peer-to-peer lender, the majority of their lending has been done by banks already. So this really begs the question, as someone that wants to take out a loan, why would you bother even using Harmoney as a service? And why not just use a traditional bank and take out loans from a bank? Even though I have plenty of questions about Harmoney as a business itself, I still decided to have a look at their IPO price and see whether or not it's actually a worthy investment. So their IPO price is at $3.50 per share in Australia dollars, and that is listed at around 3.5 times revenue, and with a 350 million in market cap. In order to find out whether it's worth it or not, I want you to not focus too much on the share price itself and rather look at other factors. So one of the main factors I wanted to look into is the default rate for Harmoney. So in their very long prospectus, they have a default rate of around 5.9%, and that is after 32 months. And they have a default rate for their loans of around the 2% mark after the 12-month period. Now, during the current economic downturns, this value is almost expected to rise in the future rather than decrease. In order to have a better frame of reference, I looked up the default rate for another peer-to-peer lending platform, Squirrel. So the net default rate for Squirrel across all their loans is 1.3%, and that is significantly lower than the 2% mark for Harmoney. So then I tried to actually look at whether or not Harmoney as a business is actually making money. Now, Harmoney has only made money for the first time last year of around $7 million, and this is extremely low return given the fact that they have lent out more than $1.5 billion. So it's really not looking particularly good for Harmoney itself as a company. Even the founder of the company itself have stated last year that they don't really see a real feasible way of making money in the peer-to-peer lending sector. And that might be the reason why they transitioned into more focusing on wholesale lending. Another problem with investing in Harmoney itself is that within their prospectus, I look into their dividend policy, and it said that no dividends are expected to be paid in the near future following the company's listing. So not only do you have a company that's not really making any profits, and they're also not really paying out dividends. So overall, Harmoney is a company that ditched their initial peer-to-peer lending platform system, which made them a relatively popular platform in the peer-to-peer space, because they found it too difficult to make money in that particular sector. And there is no real point in using their service when you can simply get a loan from a normal bank. Now, for all these various factors, I find the Harmoney IPO an extremely risky investment proposition. Personally, I would not be investing in the Harmoney IPO because I believe this may simply be an opportunity for the founders and initial shareholders of the company to cash out during the IPO process. And the fact that they're simply a too risky company that does not distinguish themselves in the personal lending space. So I would not be investing in the company. But let me know what you think in the comments below, and as always, I will see you in the next video. Peace.